Welcome back, traders. If you are looking for a strategy that lets you profit from market recoveries and quick reversals, then you have come to the right place. Okay, so in this particular video, we're just going to be diving deep into the rebound trading strategy. Okay, the rebound trading strategy. It's actually a method designed to help you catch pullbacks and bounce back moves in the Forex market. Okay, now this strategy is actually perfect for anyone looking to enter the market when it is making a quick recovery after a dip. All right, so let's just quickly jump right in. Okay, so what exactly is the rebound trading strategy? As the name implies, rebound, right? The rebound trading strategy, in simple terms, is actually a strategy that is about spotting market pullbacks during an overall uptrend or downtrend. Like in this case, where we have an uptrend, just about spotting pullbacks and taking advantage of them. And then in the case of a downtrend, you spot pullbacks and take advantage of them as well. Okay. So basically, after spotting the pullbacks, whether in an uptrend or a downtrend, then you use them to enter trades in the direction of the primary trend once the market starts to recover. So the key idea is to enter after a price drop, right? After a price drop or retracement, right when the market starts to bounce back, right when the market starts to bounce back and ride the price movement as it returns to its original trend. So whenever you have a pullback, the idea is to enter a buy in a bullish trend, right? Once the price begins to bounce back. And once you notice a pullback again, once the price begins to bounce back, enter another buy trade. And in the case of a sell, in the case of a bearish trend, where you notice a pullback, and the price begins to bounce back downwards, you enter a sell trade, and that is how it happens. Okay, and then you ride the price movements as it returns to the original trend. Now, this isn't just about jumping in whenever you see a dip. Okay, a successful rebound trade requires careful timing and analysis. Now, the strategy actually works by identifying specific points where the market is likely to reverse and continue in its primary direction. But how do we spot those points, right? First of all, let us talk about the market conditions that set up a perfect rebound trade, right? A rebound typically happens when the price temporarily moves against the main trend, right, before returning to it. For example, if the market is in an uptrend like we have here, you may see a brief pullback, right, or correction. You can see a couple of corrections, right? Brief pullback or correction before the market moves higher again, right? Now, the key is identifying the support and resistance levels. Okay, very important. The key is identifying the support and resistance levels, right? These levels act as barriers that the market struggles to move beyond. Now, a pullback will often find support at a key level, right? At a key level before bouncing back. If you're in an uptrend and the price pulls back to a level of support, that could be your signal to prepare for the rebound. Similarly, if the market is in a downtrend and it retraces to a resistance, right? And retraces to a resistance, you can look for signs of a bounce back down. Okay, so the first step in the rebound trading strategy is to ensure that the market conditions are right. Is the overall trend intact? After we see, are we seeing a pullback to a known support or to a known resistance? Okay, these are questions you're going to be asking yourself, right? So this is the foundation of your analysis. Now, next, let's dive into how we recognize price action signals that indicate a potential rebound. Now, price action is crucial in spotting these opportunities because it tells you whether buyers or sellers are regaining control of the market. So you might want to look for certain candlestick patterns and price movements that signal reversal, such as pin bars, engulfing patterns, double tops and bottoms, and all of that, right? So in the case of pin bars, these candles have a small body and a long wick. So let's just quickly see if we can find a pin bar, right? So we can find a pin bar around here. Let's see. Okay, we have a pin bar around here actually. You can see I have a small body and a long wick, right? So it indicates a rejection at a certain price level. You can see that we have a support level around here, and it's around the support that we got this pin bar. So if you see a pin bar at the support level doing an uptrend, it could be a sign that the market is ready to rebound, right? And then in terms of engulfing patterns, there is a bullish engulfing pattern at a support, right? A bullish engulfing pattern at a support, or a bearish engulfing at a resistance. They can indicate a strong potential for the market to reverse in the primary trend direction. So basically, an engulfing pattern is one in which the bullish candle, a bullish engulfing is one in which the bullish candle swallows up the previous candle, which was a sell candle, right? It actually covers the body, right? It covers the body of the previous candle. And then a bearish engulfing is such that, the bearish candle swallows up the previous bullish candle. Okay, so that is what we call an engulfing, right? An engulfing pattern. Okay, then we also have double tops and double bottoms, right? So if the market forms a double top, right, at a resistance, it might indicate that we're about to have a reversal. Okay, but if the market forms a double bottom at a support, right, it may indicate that the price is ready to move higher again. By understanding this price action signals, you'll be able to confirm your analysis and get a clearer idea of when to enter the trade. So how do you know when to pull the trigger on a trade? Okay, because timing is everything in the rebound trading strategy. The key is to enter after the market has shown signs of recovery from the pullback, okay, and it's moving in the direction of the primary trend. This means waiting for confirmation that the market is indeed bouncing back. So here's what you should look for. In an uptrend, wait for the price to break above a recent high or resistance level, all right, signaling that the rebound is real and the trend is resuming. Then in a downtrend, you can wait for the price to drop below the most recent low. For example, let's say around here, drop below the most recent low or support level, confirming the continuation of the downtrend. Entering too early can lead to false signals, so always wait for that confirmation before jumping in, okay? This extra patience will help you avoid getting trapped in a false rebound. Now, let's talk about risk management real quick. While the rebound trading strategy can be powerful, it's important to manage your risk, okay? The market doesn't always rebound as expected, so it's crucial to have a clear stop loss in place. For example, in an uptrend, right, you can set your stop loss just below the support level, right, where the pullback started. In a downtrend, you can place your stop loss just above the resistance level, okay? By doing this, you protect yourself in case the market decides to go against your trade. You'll also want to consider your take profit targets based on recent price highs or lows to lock in your gains, okay? Good risk management ensures that even if a trade doesn't go in your favor, you are limiting your losses while keeping the potential for profits high, right? So why does the rebound trading strategy work? It works because the market is always moving in waves, right? Price does not move in a straight line. And understanding these waves allows you to position yourself for maximum gains. Now, the strategy aligns with the natural ebb and flow of market movement. Rebounds happen all the time, whether it's in an uptrend or a downtrend. And by waiting for the right signals, you can ride the wave of recovery with confidence. The key to success with this strategy is patience. Waiting for the right setup, using clear entry and exit signals, and managing your risk effectively will give you the best chance of success in these trades. So there you have it, the rebound trading strategy in a nutshell. It's a simple yet effective way to capitalize on price pullbacks and ride the market's natural recovery. By identifying the right conditions, recognizing price action signals, timing your entry, and managing your risk, you can increase your chances of making successful trades in any market. If you found this video helpful, make sure to like the video and subscribe to the channel for more Forex trading tips and strategies. And let me know in the comments Have you tried the rebound trading strategy before? How did it work for you? All right. Thank you for watching in the meantime. And as always, happy trading. I look forward to seeing you in the next video.